Yeah, look, on Twiggy, so basically the hypocrisy is risible. Just because he got lucky and skilled and lucky and made a bunch of money exploiting resources that happen to be there that are undeniably dirty, doesn't mean he gets to turn around and tell everyone else how to live their life.
Righto, money miners. Geez, got a weekend special here. She's a friggin' marathon, and it is the longest I've ever gone with saying fuck all. Geez, she went over my head a bit.
You were the quietest I've ever seen you, Matty, except when you're on the tools. Then you're in the zone.
When I'm in the zone, just
but
boring
you weren't in the zone. You were looking like this the whole time.
I was like, fuck, what the hell is he talking about? But, mate, high-level stuff for shareholder activism coming the money miners' way. I can't wait to listen to it.
Take it in the second time. But this is wicked. We had a wonderful chat with Jeremy Raper. For the money miners who aren't familiar with Jeremy, he's got a bit of a social media presence on old Twitter, but he's a switched on guy. He's spent 4 years working at Goldman Sachs. He's worked at hedge funds. He's a real interesting thinker, and when he talks and articulates, even though it takes him a while, he does. You can understand his process of thinking, and I think for me when I hear him talk, I love that because he gives you the ability to critique the way he thinks. Why is he interesting to me, Matty? Because of the activism.
I think you want to be him. You want to be him. Well, and you want to start an activism fund with him. I think it's just like a fucking bit of a job interview you were having here.
Oh no, you heard there that he's even Jeremy's bloody struggled to raise money for a fund, so I've got no hope, mate. So anyway, but it was great to chat to him. I mean, we've had a bit of a Twitter exchange in the past where we were talking about the potential of Activism on Metals X, for example, which is stock we've discussed many times on the show, and it's a stock that we should do a collective ding ding ding. Now we talk about Metals X, Yancoal, and also Carnarvon on the show, which between us, at least one of us owns those stocks. So the exchange on Twitter about Metals X was like, what would it take to go activist? What's the opportunity? And Jeremy comes at it from a perspective of it's not even worth having a crack at because it's just too hard to create any outcome given the shareholder dynamics. So I just found it really interesting to talk to him about what are the opportunities to actually get involved in and why are they worthwhile? What do you need there? And in the mining and resources world, what's actually interesting from a value and activist perspective right now?
Yeah, it's fascinating how he breaks it out. He's clearly, like you said, put out the ideas for a decade now, starting on social media, writing his newsletters, and he's really refined it. And Metals X is a great example of going beyond just seeing, value. Essentially that's a value trap to him because there's a process he goes through and value is just the first check on that. Can you unlock it is the second bit. And he breaks it out really logically, which I like, and it was awesome to unpack that. And the money miners will be very interested, I'm sure, in hearing a whole bunch of other, relevant stocks. There's miners that he plays around in because there's a lot of deep value in the ASX
Deep
space.
fucking value.
Deep fucking value.
He was involved in the Carnarvon thing with Rusty a bit.
Exactly. It goes into depth on the Carnarvon activist campaign. What does that look like? Why go for it? What do you need? What changed at Carnarvon to really get a latent activist actually really interested? And it might have had something to do with Rusty.
Yeah, exactly. No, it was she was a high level, and we're just went for a couple of hours. So that's why she's coming out on Friday, and we're just going to give the whole thing to the money line. That's the people we are, mate. Mate, this won't be the last set of companies he'll go activist on. This is his mandate, and mate, there's plenty at risk out there.
Tell me.
You better bloody watch yourself.
Yeah,
wouldn't you?
I would be worried.
You don't want Jeremy Raper on your ass.
Jason Bourne coming after you.
Jason Bourne, he's a bit of a corporate assassin, you'd say.
Self-proclaimed.
And I think I look at right, what are the things that will attract his attention? As you said, bad misuse of corporate funds, unnecessary corporate structures, just shit management all over, or possibly just not even use and verify. That could be a reason that Jeremy Raper could be coming for you.
Unverified companies, he'll be all over you.
And you'll hear in this episode about mate, he can really cause a ruckus. Why would you even put your company at risk by not having verify and have Jeremy Raper come and bloody knocking on your door? I fucking wouldn't want it. I'm tempted just to buy verify, not even use it, just so I don't get Jeremy Rapered, because that's bloody
Call it a bit of an insurance policy, hey?
It's a bloody insurance worthwhile. Because as we said, if you're not using VRIFY and you're a mining company out there, you got something to hide with your ore body or your diamond drilling or your geophys or something. I don't trust you. Simple as that.
I'd be more scared if I was a mining company of Jeremy Raper coming after me than I would be putting out a VRIFY model of a shit ore body.
Yeah, yeah, that's definitely even bloody just get it out there. Let your share price tank, because once Jeremy Raper gets a hold of you, Jesus Christ, it's a lot worse.
And on the flip side, if you've actually got a good ore body, get VRIFY and show the investors out there you've got something to show off.
Jeremy Raper won't be coming near you. It's simple as that.
Mate, 100% to the bloody point. You are going to attract people to be interested in your opportunity if you are articulating the story. Dreaded words, the story. Better than anyone
there's some
else.
bloody good stories out there, right? But I'll tell you,
especially around here in West Perth.
Mr. Raper said to me off air, he actually asked for a list of all the companies I know that don't have VRIFY, because he was just looking for a bit of a short list for his next Activism campaign. So look, if you haven't got it, happy to update the list if you do sign up. But I'm going to be sending that one off in a week. So pretty much if you haven't contacted VRIFY, then Jeremy Raper's coming after you. It's as simple as that.
Next week's plug, mate, we're going to have an email ready to go for you to copy and paste in the show notes, and you send it to the CEO of the company you're invested in, and it's bloody going to tell them to get on VRIFY or your company stuff.
Just get verified. Communicate in 3D. No one gives a shit about 2D anymore. No one understands it, and they understand it in the wrong way, and it's just not good corporate practice. Simple as that. Get VRIFY. And I'll tell you what, another thing, like a lot of to use VRIFY, you need a discovery.
You do.
Some of the biggest discoveries ever. What are we talking? Greenbushes, the recent lithium ones like Andover,
like in recent history.
I think even like Pilgangoora. I'm pretty sure
that's printed a bit.
Seamus Murphy was involved in every one of them.
He was,
that like something to do with anytime exploration services.
Yeah, they used.
He was there with Paddy Hanning as well in Kalgoorlie.
Yeah,
late 1800s.
Yeah,
I think he was there.
Vicunia's the recent one, mate. That's bloody
Seamus Murphy. Yeah. Anytime exploration services.
Kamoa Kakula, Seamus.
Because if you need, if you're starting any exploration, what better starting point? You go to Seamus to fucking help you.
No one's been responsible for more tier 1 discoveries.
Seamus Murphy and anytime exploration, between just putting the people there, the bloody Polarises to drive around, the core cutting, the bloody sampling, the friggin' everything, exploration is anytime exploration. Anytime and any size of a discovery. And because it wasn't enough, anytime exploration services, AES, there's a new division, boys.
Tell me.
AEH.
Anytime exploration helicopters.
Australian earth moving and haulage. Because he's like, anytime exploration they're gone from anything exploration and any other industry now, they're getting into earth moving.
There you go.
No
mate.
bloody joke. Big Seamus is merging with Miljo Earthworks and Haulage. And, mate, so talk about a friggin' turnkey solution. Mate, they're going to be doing the civil works, mine site construction pads, clearing for mine airstrips, mine site grade control drill lines and pads, bloody dams, mine site rehab. In addition to all the exploration, bloody Seamus he's even going bigger. And this is on the demand of him. Like, people have come to him and said, right, can you do this? KCA attitude, because they said anytime, anything, and they've asked for a bit of earth move, and he's like, I'll just go bloody merge with an earth moving company. Simple as that.
It's like I want earth moving, and Seamus's response was, I'll move the earth for you.
I will move the earth for you and bloody get Rhino Sullivan to lift it, and then bloody Adam Wilson to chuck a nuclear reactor on there. Like, mate, just the...
And it's all turnkey. You don't have to do anything.
It is, JD. Mate, it's a clearing for a mine site airstrip. You can go bloody land a bit of MinRes air on there afterwards. Like, mate, it just doesn't stop. And, mate, because I'll tell you what they got. They've got a D5, D6, D8 dozer. They've got 25, 35-ton excavator, rock breakers, trucks, trailers, dollies, mate, anything earth moving, anything exploration, Australian earth moving and haulage and anytime exploration services. There's shit everywhere. Mate, go Seamus Murphy. Just Australia's biggest exploration and earth moving entrepreneur, moving the world.
And he's won the gold medal for tunnel ball.
Has he actually?
Yeah.
There you go.
Wow.
Bloody, what can that bloke, what can't he do?
On that note, gentlemen.
That is no activism coming those companies' ways,
Yeah.
I can tell you that. Right, let's get into Mr. Jeremy Raper, shareholder activism guru. Here we go.
G'day, Jeremy. We're stoked to have you join us on the podcast today. We've been having some discussions around shareholder activism, and you've been relatively active in the Australian market of late, getting pretty interested in some predominantly, undervalued in your opinion, oil and gas stocks, but you also have some mining positions which we're keen to unpack in the course of this podcast. So we're excited, mate, and welcome to Money Mine.
Thanks for having me, guys. It's a pleasure. I've heard a couple of your pods with some of your prior guests that I've had, let's say, encounters with in the real world. And I like what you're putting out. It's a refreshing change of pace for the kind of buttoned up, staid, typical finance podcasts or investing podcasts. So you guys are, I think you're hitting the cover off the ball. So good on you. And I'm not really a mining guy, to be honest with you. So I think the way I approach it is a little bit different than a lot of your other guests, or at least your more kind of day-to-day kind of, let's call it, value in the ground type approach, typical kind of mining investor approach, but maybe I could add value in a slightly different way from a more special situations kind of focus.
Were they positive or negative encounters with previous guests?
Mostly positive.
Oh, there you go.
The ones that go on your podcast. I mean, I'm particularly thinking of Russell Delroy from Nero, who's a really smart guy, a very sharp guy, and I have a lot of respect for him and his basically everything but his hairstyle, let's say.
and the fingernails.
I didn't see the fingernails. Actually, I didn't see the fingernails. No. I mean, in all seriousness, Rusty's a refreshing voice. Yeah. And I mean, look, we're involved in a couple of stocks, I guess, not together, but kind of thinking along the same lines, and the kind of approach that he brings to some of the junior mining space. I think if it were replicated amongst other kind of semi-activist or activist investors in some of those companies would be hugely beneficial to the market. And a lot of what he said with regards to particularly junior mining management teams or small cap management teams in general is like bang on. I mean, I think it's great that he kind of looks like the front man of Poison or something. I think it throws people off. But behind the hood, he's a very serious investor, and obviously his track record is kind of speaks for itself. So I think no critiques there, and had only positive things to say about Rusty.
Yeah, he's a legend, and that interview you're probably referencing, I feel like the term soft issues is now kind of part of what we will kind of talk about when we talk about junior mining companies, when we talk about activism, when we talk about deals, and we can thank Rusty for that one. And keen to get your view on soft issues throughout the course of this interview too, mate, because I'm sure you've had your fair few encounters with soft issues.
I think that's the right spot to start, Jeremy. I'm going to embarrass you and pull out a quote from the Australian with you. And it says, Raper believes financial markets are not as efficient or competitive as theorists argue because of insiders' powers. And this is the soft issues that we talk about all the time, and incentives at the end of the day. So I'm keen to sort of put that forward to start with and hear your thoughts around incentives, insider ownership, minority ownerships, and how that sort of guides you picking the opportunities that you ultimately choose to invest in.
Okay. Yeah, I mean, you hit on a lot of the issues there. So, I mean, I'll try to frame it in terms of kind of situations where I've been involved in, or stuff that where maybe some of your listeners or your other previous guests have been involved in. So, you often see this kind of agency problem in small cap. I mean, look, it's less of an issue with large caps, but particularly with small caps, where a lot of what I do is essentially trying to find kind of deep value in undercovered smaller or mid-cap stocks, and then extract that value and put it back into the hands where it belongs, namely that of the investors, ultimately the owners of the company, right? And invariably, and we'll probably talk about this when we come to MLX, right? I think you guys wanted to talk about that as well. And it's actually a big issue in Japan, where I am, where you have a whole number of these small or mid-cap companies where they're eminently cheap, they're eminently undervalued. They have, and it's a pretty hard undervaluation, meaning we're not talking about ephemeral, what's the value of this business? Is it a 10 times multiple? Is it a 20 times multiple? Is it we're talking cash and real estate, essentially, or cash and shareholdings in other listed companies, okay? And you have a ton of these things where they're trading at some relatively large discount to hard assets, and maybe you get a business on top or whatever. But you cannot unlock that value for various reasons. And oftentimes it's you have a recalcitrant management team that is entrenched, that has the board in their back pocket, that has tenure, and then you have a shareholder base that for various reasons is not motivated to rock the boat or to kind of do the heavy lifting required to extract that value and put it back in management's hands. And oftentimes that's not because I assume they want to get paid, or I assume they're in the investment because they want to make money at the end of the day. But look, if you're dealing with $100 or $200 or $300 million company, and there's some small there's some guy it's a 2, 3, 4, 5% position, and it's less than 1% of their broader portfolio, then they have other fish to fry, right? Like they're not going to get out of bed for their 1% of their portfolio, 1.5% of their portfolio, if that, right? So and often these issues compound because by the time people like me or people of my ilk are looking at these kind of names, they're probably been underperformers for many years, okay? So a lot of the money that used to be in the stocks have fled or have tried to go out. And so if the stock price is already down 70 or 80%, it might be a legacy position for a lot of funds. And by that point, their fund has either grown or they've gone in different directions. And what's left in this kind of, cigar butt type investment is such a small position of what it was that they're not going to rock the boat for, a legacy kind of leftover losing position anyway, right? So you have that combined with probably a recalcitrant management team that may or may not have equity in the business. Now, I have to differentiate between, say, the Japanese situation, where oftentimes there is a family ownership, right, or some kind of insider ownership, but they're not as economically motivated as you'll want to see in the West, right? So there's a cultural difference there, which we can talk about if you like. But like the Japanese, the Japanese conception of capitalism is very different than what you or what we would consider the highest and best use of capital. So just because a family owns 25, 30% of a company doesn't necessarily mean they want to maximize shareholder value in a medium period of time. Okay. So we'll put that to one side, but let's look at some of the case, which is more common, which is kind of like the junior mining space or busted oil and gas company space in Australia, let's say, where oftentimes you have a whole cadre of professional managers who have been serial capital raisers, who maybe they had 1 or 2 exploration successes back in the day and then they pissed all the money away, where they'd much rather build the empire rather than return the capital if they ever had any kind of success at all. And invariably they own a pretty small percent of the company, and most of their remuneration comes essentially from those capital raises. They get paid out of shareholders' funds. And they'd rather kind of perpetuate their small cap or mid cap seat with minimal accountability rather than do the right thing, which would probably be to sell up to a larger, and this is the point Rusty's made. I was referencing Rusty before. This is the point he's made, where you have these single asset companies or single exploration companies. I mean, the cost expense ratio is just off the charts for a small cap, having to dilute at low market caps or whatever. And the managers would much rather just be entrenched and milk the shareholders for salaries and board appointments for as many years as they can, rather than do the right thing and monetize the asset or monetize the cash on the balance sheet. And so, those are some of the issues you deal with. And so I guess kind of a long-winded way of answering your question are soft issues. But for me, what's really important these days is not just finding value. There's a lot of value, okay? There's value in Japan. There's value in small cap Australia. There's shitloads of value in small cap UK. There's even a ton of value in a bunch of US stuff still. The US is the most picked over market in terms of opportunities, and yet in the busted biotech space, there's a ton of value. But it's always this delta between finding the value as it is on paper in the market and then actually getting the value into your pocket, actually extracting the value and monetizing it so you can move on to another investment. And kind of that's where the rubber meets the road for me, right? So, you have to consider all these different things, how encouragement, how much of a stake do they have in the business? How are we going to motivate them to, do what, let's say a shareholder like me would want, or, shareholders of my ilk would want. Is it possible to do that passively? Is it possible to do that semi-actively? Would you actually need to take a control position? Is there someone else who's already in the name who could potentially take a control position or get close enough to a control position? these are the kind of the considerations that I kind of think a lot more about than the actual value these days. Because value is just the starting point, right? Like, I actually think a lot more about kind of the event path, like how you kind of swim through the stream to get to a check, rather than the finding a cheap stock or finding these days, a lot of the finding of the value, this finding of the cheap situations is kind of presented to me, to be honest with you, on a reverse inquiry basis.
You use the word, cigar butt, and it's a bit of a Buffettism. And I'm curious. Like you say that there's plenty of these cigar butts around, but how do you actually extract the latent value? What are the characteristics you need to be present in order to really see a high probability or a good enough equation for you to want to get interested to extract that latent value, given the obstacles that we discussed?
You cut off at the end there, but I think I got the gist of your question. Look, it's very much case by case. It's the interesting thing about the investing business is that there's no situation you see completely like another situation. Like, a lot of things rhyme, but very rarely are they all the same. If they were all the same, there'd just be no value, because people would immediately recognize the patterns, or computers would recognize the patterns and immediately monetize them, right? So generally speaking, you'll see a combination of things you like in varying degrees, but it's all in one box. It's all insufficient to get the outcome you want. So you have to change something to get the outcome you want, right? So typically you'll want to see something like, obviously, a lot of latent value, probably hard assets if possible. So either, a bunch of cash, a bunch of real estate, some property, maybe some other listed investments that are relatively easy to monetize, maybe a pretty stable, dependable business, or even like a cash flowing mine with a reasonable amount of life left, where costs have been stable and production has been stable, right? So an established mine or a new startup mine or whatever, which might be a bit more, volatile, or oil field, whatever, there's more risk in a new well or a new field development than there is in a stable one with a kind of gradual decline profile. So something like that, and then something in the shareholder structure that is either changeable or amenable to value extraction. Okay, so it's good to talk about MLX now, just because we're going to talk about it later, and it's perfect for like why I think it's tricky. Like, I'm not saying you can't make money on it, but just from my perspective, it seems very, very tricky. So you have obviously latent, very, very cheap stock. Market cap's a couple hundred million, few hundred million, and they have over half the market cap in cash, close to maybe north of 60% now. But it's a completely locked box, in my opinion, because you have 26% of the company is owned by a Chinese shareholder, but there's a couple of other smaller Chinese shareholders below them. So like the total Chinese ownership is more like 30+% of the company. You can consider that kind of a Chinese block, let's say. And then you have Old Peak, who's selling down, and they're currently at 6%, and they've been selling down for ages. Now, if they were at 10 or 15% and they weren't selling down, that might represent an opportunity, right? Because potentially you could then go to them and either enlist them in what you're trying to do, or you can take them out of their position, assuming they want to sell, right? You could negotiate some kind of transaction to take them out of their position, and then you could run with the ball. But even then, it would be fiendishly difficult, because at the end of the day, with a blocking stake of 30-some%, any kind of overt activism, meaning calling a 249D meeting, trying to remove directors, put on your own directors, there's just not enough shareholder participation to get you the numbers you would need in that kind of register, right? You have the Chinese at 30-something%. You have Old Peak at 6. Then you have Farjoy at 4 something. Maybe they're even smaller now because they're below 5%. You don't actually know how much they own. But I actually have a bit of history with Farjoy. They're a family office for a rich solicitor, I think, in Sydney. They were involved in Far Limited, one of my prior adventures. And look, they weren't really amenable to discussing kind of these kind of strategies. Let's put it that way. So I'm not sure they're a reliable party in terms of what I'd be trying to do with a situation like this. So what do you do then? If let's say in the best scenario, I went into the market, I managed to acquire a few percent of the company, or let's say somehow I, struck gold and I managed to convince Old Peak to sell me their residual stake. And then I went into the market and the volume was there. Remember that it only trades 2 million shares a day and there's 900 million shares outstanding. So the best I can acquire on any given day is maybe 900,000 shares a day, which is 10 basis points of the company. And so let's say I went into the company for 100 days at 10 basis points a day and acquired 10% of the company, and then added that to the old peak stake, I'd still only be at 16, 17%, right? So I'd still have to get turnout at a given meeting to be, north of 60% to have a shot at tossing the kind of turning the table over and maybe coming to close to taking control. Now, you might say, well, that's all well and good, but you've still got 70% cash backing in the equity and you're covered. I'm like, okay, that may be true, but how do I get my money out? Once I'm in, I can't get out, right? Essentially, in this situation, the only way you get your money out, look at old peak. There's a perfect example. Why are they selling down this equity when it's trading at 1 times EBITDA or whatever it is? That makes no sense, but they cannot get out. There's no way to get out. So what's the way to get out in a situation like this? Is the company needs to be sold. Okay, but who do I sell it to? Because the Chinese probably wouldn't be allowed to buy the whole thing, given the relationship between Canberra and China, okay? But they're the only ones that can buy it because, so you see this kind of circularity, right? So if they can't buy it, but they're not going to sell it, and I can't take control because they own enough, then it kind of is quite analogous to some of these Japanese situations where I look at it and I'm like, yeah, dude, this thing's trading at a third of fair value, but like there's only one potential buyer and it's the founding family. And if I can't get them out, then, I'm sitting waiting around to be maybe taken. Actually, the Japanese situations are better because at least they might do an NBO or an LBO at some point and get away with it. So I could actually get my money out, even not at the right price. Whereas MLX, basically what you're hoping with MLX, in my view, is you're hoping for the Chinese to get religion and pay dividends like Yancoal. Okay, so Yancoal is an interesting example because it also is a Chinese-controlled resource company. It's very, very cheap. And guess what? They somehow got religion. They paid off all their debt during the boom times in thermal, and they started paying fat divs, and everyone got rich.
Yeah.
Or at least for a period. So, that's kind of the best case outcome. But even then, you didn't kind of get paid, right? Like, you did well, but you didn't get paid like some of the US coal names that essentially could buy in huge amounts of their own equity during the boom cycle. So it's kind of a long way of kind of answering your question, but yeah, it just seems tricky to me, absent the Chinese. So if APAC turned around to APAC Resources being the 20-something% shareholder in MLX, if they turned around and hit the market or were putting that stake on the market, even if the stock was up 25% that day, that's when you want to get involved, because that is the sword that cuts through the Gordian knot of getting the value out of that situation, right? So they might put that stake. I have no idea. This is all hypothetical, but you often see situations where big shareholder comes in and takes let's talk about a good example, perfect example for your listeners that they can learn from. It's actually monetizable. Carnarvon Energy, CVN.
Carnarvon.
Rusty's
You're saying it wrong, mate. It's Carnarvon.
Mate, I've been living in the US for way too long now. Sorry, I can see Matt rolling his eyes there.
Oh, buddy, I'll have your train back up by the end of the episode, Cobber. Don't worry about that.
He's like, mate, what are you doing with that accent? Mate, that's horrendous.
You got one of the mongrelized ones.
Well, the funny thing is, when you talk to Yankees, when you talk to Americans, if you don't roll your R's, they have a hard time understanding what you're saying. Okay?
Oh, really?
So when I was in the US, I would try to roll my R's at least a little bit more. So I say Carnarvon instead of Carnarvon.
There we go, you're back.
I'm back. But when I'm back in Sydney, like over time, I gradually, it gets more and more bogan as I go along. I always have a very, super broad accent, but it gets more distinctively Australian. Look. So this is you never touched on it directly, Jonas, but like one of the reason I spend time looking at like small or mid cap Aussie stocks is it's just like there's so much value hiding in plain sight where you can see the change in the event process, right? So that whole example in MLX that I gave is an unlockable box for now. But in the scenario where there comes a day where the Chinese sell or whatever, something changes with the register to allow you to unlock the value, I know there'll be an opportunity, even if the stock's up 10, 20%, because the Aussie market is so stupid. I don't want to say stupid, but just focused on the wrong things. Like at the top end of the pond, there's so much pension money chasing all these overvalued ASX 200 stocks. And at the bottom end of the pond, there's all these washed out, oil but not necessarily just oil and gas, industrials as well, some small cap software companies as well. Literally, no one's looking at them, or there are even event names in process, like bidding wars going on live where no one's looking at them, or they're not priced appropriately, where there's all this arbitrage money or event special situations money in the US. It's too small cap for them to look at. So it's just me and a bunch of my mates basically looking at this stuff. So I'm being generous in calling Rusty one of my mates, because essentially what he's done there is he's looked at this thing. Carnarvon is trading at 12, 13, 14 cents with 15 cents of cash and a 3 to 4 cents not an earn out, but a carry. So call it 2 to 3 cents if you NPV the carry, because the idea being if or when Dorado gets to be a final investment decision, and if or when the equity partners in that development need to commit capital, it's not today, it's going to be in the future. So the present value of that cash to Carnarvon shareholders is actually less than the face value of that cash, if that makes sense. But anyway, shorthand, 17 cents of value, hard value, right? Cash plus farm-in cost of carry, and the residual 10% in Dorado and Pavo, which even if you just mark it at the level of the last round of disposal, right? So what the Taiwanese sovereign wealth fund paid, in a probably I'd say a weaker oil price environment, and also with more uncertainty, given that was during the whole Barossa gas. So I'm jumping all over the place here, so I hope your listeners are somewhat familiar with the situation. But the whole roadblock on the Dorado development from Santos's perspective, Santos is the operator and then the main owner of that asset, is the fact that it's in the northwest of Australia. There was native title challenge to another asset in the northwest of Australia, which was the Barossa gas development, which was total bullshit and was just struck down by the courts. But at that time, meaning the last 12 months or so, had been challenged on various grounds and put the whole development of oil and gas industry in that part of the world into disarray. So during that period of time, CPC, which is the Taiwanese Sovereign Wealth Fund, came in and bought 10% of Dorado and 10% of Pavo from Carnarvon for the exact dollar number escapes me, but call it 10 to 12 cents per share of value. Let's say just maybe more, 13 to 15 cents of value, because I know total value for Carnarvon today is about 30 cents, 31 cents. So basically you had this situation where Carnarvon's just trotting along, trading at 12 to 14 cents. Rusty had a legacy position in the stock from back in the day. Now this is all public domain, okay? Anyone who'd been following the story or wanted to put in the effort to follow the story and get up to speed could have looked at the history of Nero Resources' involvement in the stock. Okay, they made a challenge in 2020, I believe, where they tried to get one of their guys, Mr. Douglas Gentry, a geologist, onto the board, and it was blocked in a very acrimonious fight by the then chairman, Deborah Baker. So that was the background, and at that time they owned a smaller piece of the stock.
I think they've got history with Deb Baker as well, who was on the board of Capricorn back in the day.
Exactly.
She's got history.
Exactly. They've gone.
Some of these people have real credibility, mate.
No, you're right. You're absolutely right, Travis. They have a certain history with that lady, and let's just say an acrimonious history. Not as familiar with the specifics, and can't really speak to it, but there's history there. So they didn't get their guy on the board back then. They had a smallish position. But what changed? What changed is a few months ago they went substantial. They went over 5%. That's disclosed to the share market. Everyone can see that. Nero goes over 5%, they file. Okay, even if you've done a cursory amount of work, you know that the only reason to go over 5% there is, they're not buying it because they have some newfound view on Dorado's value out 5 years once they go to final investment decision, right? You can look up Nero's historical engagements in 3 or 4 or 5 of their last investments, right? They're much more hands-on. Rusty spoke to this directly to you guys, right? He's much more active and wants to kind of set the agenda and do what's right for shareholders. So, that doesn't make it a sure thing, let's say, but it certainly suggests with a much higher degree of likelihood that there is change of brewing. So, they went substantial. You can pull up the rest of the register. You can make your own inquiries. You can put 2 and 2 together, and this thing's still trading at. It went from 14 cents to 15 cents. Right?
I think following that,
maybe it traded a little bit up.
There was a change in substantial where they had to disclose that their holdings and Collins Street holdings were aggregated for the purposes of wanting to.
That's right.
To attempt to change the board. That was disclosed on that.
Yes, you're completely You're completely correct and they actually said explicitly with regards to management of the company, or they used language to that effect. Now, I'm not sure if the stock moved when they said that, but when they went to straight 5%, I'm not sure they made that disclosure. Then Collins Street updated their disclosure, or someone, I think it was Collins Street, then updated their disclosure to make that public, to make that clear. And at that point, you knew, the game was on for young and old. And I mean, yeah, maybe the stock went to 16 cents or whatever, but it was still eminently tradable for anyone who's not managing, 8 figures. Okay. And the stock's 21, 22 cents today. So no one's in, diamonds and furs necessarily with a 30% return, but I'll take a 30%. And then, since then what's happened is they've essentially rolled the board and put in their own guys, and they're pursuing all opportunities to dispose of the assets or maximize value. And, I think the equity is still clearly worth at least 30 cents and could be worth reasonably more than 30 cents. And, the stock's at 21, 22 cents. So it's gone from discounting a bad corporate structure and a huge amount of trapped value, and now it's discounting execution. Right. So that's the key. And even in that move from discounting trapped value to now discounting execution on a potential sales process or proving out more value in the 2C resources, contingent resources, a huge amount of value is being created, right? Stock's gone from 15 cents to 21 cents, 22 cents. So it's like, okay, yeah, we're not talking Apple or Microsoft here, right? You can't deploy billions, but for any kind of small cap investor, there's definitely latent value in these kind of things. And, this is not unique. This happens a lot. I mean, Orecorp is another one. I mentioned some of these ones just because they're mining stocks. So I think it might be more kind of relevant, or you guys would be more familiar. But ORR, they have a dream of a development in Tanzania.
Yep.
A geography I'm quite familiar with for other reasons. Bit of a horrendous place to have a mine. Let me tell you. But anyway,
you mean is that bullion hulu you're talking about?
I mean that's part of the history too. But actually, some smaller mines where they essentially a bunch of companies all over the world got their licenses ripped off them by the government when the government changed in like 2016, 2017. Bullion hulu was that was related to Acacia Resources, right? That was a very specific kind of money grab from the government where you actually had a very valuable producing asset and they essentially just wanted to take more of the value. So they went after the small operator and it only got resolved when Barrick came involved. Not Barrick. It was the other one. Was it Randgold?
Randgold.
It was Randgold.
Yeah, that's who Barrick bought.
Yeah. So the Africa specialist, London listed, that then later merged. But did they merge with Barrick in the end? They merged with someone, right?
Yeah, no, it was Barrick because it was Barrick, Randgold, and then Newmont bought Goldcorp. Yeah. All around the same time.
Okay, well, yeah. So many of these mergers. But Orecorp, it's Aussie listed. They have a project. They don't have the money to fund it. They come up with this merger with some Chinese gold miner that has no assets in Africa. It's a largely stock consideration. The implied deal value is like high 50 cents a share. Stock's trading in the mid 40s. Stock goes from like 46 to 50, then trades back down to like high 40s. Even when Perseus comes in with not a competing bid, but you have to be able to read smoke signals, sure. But, this kind of stuff is pretty vanilla 101 event stuff in other markets. But in small cap Aussie, like people just, Perseus comes in and buys 19.9% of Orecorp, effectively being able to block any transaction with another counterparty, but says we are not interested in, they're very careful in the wording, but they say we currently have no intention to pursue a full takeout of Orecorp, currently carrying a lot of weight, meaning whilst the Silvercorp deal is still in process, because they had a signed deal with Silvercorp that they still have, actually. But anyway, the point is the stock's like 46, 48 cents. No one's buying it. Millions of dollars are trading. But all you have to do is pull up Perseus' history, and they did the exact same thing with some other Canadian shitbox company like 6 months ago where they went in there and they took 20%. And they said, we don't have any interest in going to pursue a deal or whatever. And then 3-4 months later, guess what? They came back and paid a 50% premium on that asset in Sudan. So another kind of developing Africa, sketchy geography, but good geology. So yeah, look,
unfortunately in this case, they didn't come back with
exactly.
a 50% premium. They came back and bid what is just marginally a better offer. The board of Orecorp will tell you it's not a superior offer, but it certainly is a superior offer. But it's not a 50% uplift, unfortunately, 55 cents only.
You're totally right. It didn't work out as well as it could have, and maybe it works out slightly better. To be clear, I no longer have a position in Orecorp, but just in terms of the event play, okay, and being able to kind of follow these situations and then make money, or give yourself the opportunity to have a good shot at making money, just from following these event situations closely and understanding the actions of the players. Irrespective of what the actual value is of the company, like just literally just following the events of the players, understanding. It was a bit like a poker game, right? You could have loaded your boat big time at 48, 49 cents, 50 cents. And yeah, sure enough, we didn't get paid lottery ticket style, but hey, you clip enough 10 to 50, 20% returns in a couple months here and there, you're not going to be out on the street corner dancing for nickels, let me tell you.
Jeremy, I'm keen to touch on Carnarvon once more and just look at how that situation could play out from now. So obviously the board got booted. You've got, a couple of new board members in there that are much more focused on realising the value, but you're still largely dependent on Santos's decision-making, where they see Dorado in amongst their other development assets, and, how Carnarvon goes about realising the value in their holdings, both in Dorado and Parvo, actually. So how do you think about the timeliness, given that that's the major factor in which you discount the values in your analysis there, and like how long's too long for you to be hanging around there? Just keen to get your thoughts on that.
Sure. Look, it's an important consideration. I'd offer two additional pieces of information. Firstly, when the 10% stake in Dorado and Parvo was first sold by Carnarvon to the Taiwanese, there were some public comments made by the former CEO of Carnarvon suggesting that there were multiple bidders and that the buyers, I assume the Taiwanese, he didn't say it directly, but he said the buyers wanted to buy more. You may also recall that at that time, Santos was and maybe still is looking to sell down their ownership. They don't want to own 80% of this thing, right? It's a big ticket. So they're looking to sell down their stakes. So my takeaway from that was, at least, this is 6 months ago, 7 months ago, so things may have changed. But my takeaway from that was the Taiwanese bid is there if they want it still for another 10%. Like, worst case scenario, if Rusty went back to the Taiwanese and said, give us the exact same price on the residual 10%, we've got it. That kind of underwrites my thinking. Now, that doesn't answer your question about timing, but here's why it's important. So I believe, and this is pretty clear if you look at the latest presentation put out by the company, because they kind of explicitly delineated what they're going to do. And actually the term maximize shareholder value was in the deck at least twice, maybe 3 times throughout the deck. So they've been very kind of explicit in signaling their intention. They're going to try to prove out a bit more of value in the 2C resources, the contingent resources, try and prove that up, create a few cents of extra value that way. You're right. That's obviously that's a decision for Santos. So there's some negotiation involved there. How much drilling will they allow? How much money will they be allowed to spend to do that? My feeling, this is a feeling, this isn't a fact, but it's a belief, is that Rusty will give them, or the new board I should say, will give them some rope, but not a huge amount of rope. Namely, if this thing is not resolved, let's say Santos stonewalls, for example, and doesn't want to throw any more money in, and makes it clear that the investment is still, FID is going to come in 2024, but very late 2024, and they don't want to do any extra, prove up drilling before then or whatever. Then my feeling is the Rusty will move to monetize via that kind of backup plan, which would be to go back to the buyers from the last go-round who expressed an interest, who wanted to take perhaps more than just 10% of the 2 fields, go back to them, ask them to bid again, and shake. I mean, look, I assume that's being done right now. They said they're considering all alternatives to maximize value. So I assume that you would see a decision on that front probably in the latter part of 2024. Me personally, I'll give them the rest of the year. I think, Nero and the new board is credible enough that they deserve time to run a fulsome process to consider all options. And they're the same stripe as me, right? Like, these guys aren't in it to sit around and get stuck. At the same time, they want to give themselves the best chance to make a good return. So, look, if there hasn't been substantive progress by late 2024, we definitely have to start asking questions. I'm not sure Santos's attitude towards this prove-up drilling is important and will determine which way we kind of go, but I don't think it should affect underlying value too much, right? Like, it may affect whether we actually get 30 cents a share or 36, 37 cents a share, but with the stock at 21, 21 and a half, that's kind of gravy, But yeah, I mean, that's kind of how I think about it at the moment. Like maybe give them another 9 months. If we come near the end of the year and there's been no substantive progress, I need to take a real hard look and see if the value is what I think it is, or maybe the appetite for those kind of long dated, long duration, high quality, but kind of 15, 20-year bet type oil assets is really what I thought it was. But, I'm relatively sanguine on that one, just given the credibility of the people who are now running the process. And also, importantly, they're not burning value, right? Like the cash on the balance sheet with current interest rates is basically enough that it's running cash flow break even here or there, and especially given they're going to cut costs as well. So yeah, they'll invest if they get their way, and they invest a bit of money in drilling it, but to prove out some of the contingent resource. They'll quote unquote burn some cash there, but I trust the guys. They've done it before,
Sure.
So they should know what they're doing. And that's kind of how I think about it.
Jeremy, just use the word stonewalling there, like Santos stonewalling, and it's the second time I've heard you use that word. And I just want to circle back to the thinking on Metals X, because you and I had a Twitter exchange on this one, and you articulated why you think the shareholder registry there makes it pretty damn impossible to run a successful 249D campaign, and I largely agree with you on that front, unless you had some change in the interim. But in response to that thinking, I wrote there are three outcomes if you ran a 249D. One is you do the 249D and you lose. You do the 249D and you win, but that's likely impossible. And option C, you accept a consolation prize to stop a campaign because the board doesn't want their credibility publicly questioned anymore. And then you pointed out that, I'm forgetting option D, and that's that they stonewall you and spend all the cash on something dumb to stop you / someone like you trying to grab it again. So I'm curious to know, like, how many times have you in your activist career basically seen incumbent boards try and stonewall activist campaigns, and what does that look like?
How many times in my career? Well, look, I've been fortunate in that it hasn't necessarily happened directly to me. Too many. I mean, maybe it's happened once that I can't remember off the top of my head, but I've seen it happen in a lot of other situations that I maybe came close to investing in, or close to pulling the trigger on for whatever reason. I held back, and then it just went south in a hurry. I'm trying to remember the one. There was this one in the US which was very cheap. Man, I wish I remembered the name of it. It wasn't that long ago either. It was like 18 months ago, where again it was basically a cash box. I think it was like a busted SPAC or whatever. Someone tried to challenge the board. I believe it was a staggered board, meaning half the board expires 1 year and the other half expires another year. Meaning if you wanted to take control of the whole board, you couldn't actually do it at one meeting. You'd need 2 meetings over like 2 years. So it's really difficult. Less of an issue in Australia, more of an issue in the US. Anyway, they were trading like half of cash. They had one good business and one business absolutely sucking wind, burning a bunch of cash, some new R&D development type business. And so the clear play was to shut down the cash furnace and just do something with it, return all the cash or buy back stock or whatever, right? And instead of doing that, they used their entrenched board position to cut and effect a merger with another R&D money incineration type business, like another moonshot. And the stock went down 60%, like in a day or something. And there was almost nothing you could do about it. So I forgot the name of it. I'm sure someone will probably recall it and mention it in the comments. But it was like, it was horrendous. And you do see it every now and then in the busted biotech space, right, in the US. Completely different than your probably target market in terms of this podcast, so I won't spend too much time. But imagine you have like a drug that you're trying to develop, right? And it has it's a huge, long process, and 10 years and $1 billion, 15 years and $1 billion, generally what it takes to get a drug approved in the US, okay? And let's say you miss your primary endpoint in one of these trials. So you may have invested hundreds of millions of dollars and raised many hundreds of millions of dollars at that time, and maybe you got 100 million left. And then the drug just total wipeout. Happens all the time. Stock's down 80% overnight. So often what happens is they'll then fire everybody. They'll fire like over half the employees. And they're still sitting there with like 100 million cash that they haven't spent, but they have this huge overhead for this drug that they thought they were going to, and whatever it is. But all of a sudden you have a chief medical officer and a chief science officer. And those guys have their options, and those guys have their packages. And maybe they're in it for the love of the game, right? Like they're not just pure, capitalists like myself. And so they see that $100 million as a ticket to another miracle drug or whatever. So instead of doing the right thing, stock's probably trading at 50 million, right? So in generally, these things trade at a big discount because there's a big burn attached to the legacy operations, costs, severance, all that. But if you could shut it all down and return all the cash, you could still make a lot of money, right? If the stock's trading at 30, 40 million, it's 100 million cash. It's kind of like a hypothetical example, but there's at least a handful of these at any given time. And so instead of doing that and just kind of moving on and finding something else, they just find another company to merge with a bunch of drugs in the pipe. And, that's all well and good if the shareholder register is still a bunch of, starry-eyed biotech dreamers. But if the register has rotated to a bunch of hard-nosed, money-grubbing capitalists like myself, it's a huge problem. It's a huge problem. So, I'm involved in a couple of those at the moment where they haven't kind of made that full pivot yet, reverse merged into another cash-burning biotech pipe dream. But there's always that risk. I mean, it's always in the back of my mind. Now, with regard to the MetalsX situation, it seems unlikely. I agree. It's probably like option D is for a reason. They haven't demonstrated a propensity to do it yet, but I have seen it happen. There's a company listed in Singapore called, it's a coal mining company. It's run by an Indonesian tycoon. It was trading at a very, very low, at cash value with the business. It was generating a huge amount of cash, largely thermal coal in Indonesian grade, so kind of shitty grade. But nevertheless, like 18, 24 months ago, it was absolutely printing cash. They had no idea what to do with it. Relatively short mine life, however, meaning the Indonesian tycoon in charge, so like 6 or 7 years of 8 years of mine life trading like 1 times cash flow. You've probably seen situations like that before. Controlled company, he owns whatever he owns, maybe not 50%, but close enough. There's no way you can take control. Listed in Singapore, so actually decent shareholder protections, but ultimately Indonesian owners. All the assets are in Indonesia. So the risk was always, and actually this is even more of a trap because he started by going in the right direction. So he started paying dividends and even started buying back a little bit of stock, but paid big dividends, like paying dividends over 50, 60% of net income. So like pretty chunky returning capital. And then he kind of stopped. And I did a call with the CEO. And the CEO was actually a Singaporean Chinese guy, so a professional business guy. And I said, I was making a typical kind of, cost of capital case. I was like, your equity trades at, 1 times cash flow or implied free cash flow yield of like 85%. What could you possibly hope to buy that would give you a better risk-adjusted return than that? Because they'd articulated in their deck, we'll look for analogous, battery materials projects or new energy transition, blah, 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 the typical kind of BS that half these management teams spout. And he kind of said, look, we've only got 6-7 years of asset life left. We need to think about the future. And it kind of completely ignoring the cost of capital argument that I was making. Oftentimes when you sit in my seat, you have this happen where you make a very kind of logical, rational financial argument and you can't actually say what you want to say in that situation. And that's basically, look, if your cost of capital is 80%, or effectively your cost of equity capital is 80%, you shouldn't be in business. You should be doing nothing other than getting your cost of capital to be 10% or 15%, what even, 20% even. Because essentially that's the market telling you that you should be reducing capital, not investing capital at a very basic level. But you can't actually say that because it means like you're asking for people to be fired, essentially. So you can't actually say what needs to be said, especially to a controlled company. It's not going to get you anywhere. There's just no point. But he made it relatively clear that, yeah, they'd pay back some dividends. Maybe the majority owner needed some cash. I have no idea. But in the end, they're not going to do the ultimate right thing, which would be a huge buyback or whatever it was. And sure enough, he left soon after, and I sold all my shares, even though I was still trading at like 1.5 times free cash flow. And actually made a bit of money. I consider myself fortunate. I kind of got lucky with the cycle, frankly, because the activist play or the kind of capital return play was just basically wrong. And he left, and within 6 months, they bought another mine in Indonesia, another coal mine. Actually, a better outcome than I thought. Like it was a cash-producing mine because I thought they could just dump it into some lithium thing or battery thing. But the stock went down like 60%. And now it's come back again because, they started producing cash again and maybe they're paying it back. And so it's actually not doing it as badly. But yeah, of course, the actual deployment of the capital was definitely not what I wanted. So there have been a few of these. I managed to dodge so far, knock on wood. I managed to dodge most of the bad ones so far, but I mean, it's always front and center a risk like that, which is why, going back to the first or one of the earlier points I made, for me, being the agent, or at least in concert with the agent to get the value in my pocket, is paramount. Like, that's almost all I think about now. Almost all I think about is being able to, even if not control, then quasi-control or come very close to controlling the interplay of events and actors, as opposed to just buying the cheapest thing. Yeah.
Jeremy,
I'm trying to really focus on the back end. Yeah.
Yeah, just on that point, you've touched on in the past about setting up special purpose vehicles to, I think you've even done it in one example to help you be that change you want to see in the stock. Is that something that sort of went well and you're keen to keep playing around with?
Yeah, so you're referencing something that is still ongoing. So I did raise money to acquire what's the percentage? There was a seller of under 20% stake in a UK listed aircraft leasing company called Avation, AVAP. This is all in the public domain, a matter of public record. And so I raised an SPV to acquire that stake and to build a position at company. And that position is about 25% of the company, slightly north of 25% of the company. I'm actually wall crossed on that stock, meaning I'm in concert with management with regard to strategy and value maximization. So I can't really speak directly about that particular situation, I'm afraid. What I would say in answer to your question is yes, it is something that's interesting to me. Taking outside money, even in a very limited scope like this, where you just put it in a box and you have one stock and you have a strategy, is kind of dealing with customers is its own kind of set of special kind of torture. Let's say I'm more of a kind of Jason Bourne type, like I don't like to go around the world assassinating CEOs by myself. I'm just kidding. No, I'm more of a kind of lone wolf type, just personality wise. But look, of course, what does raising an SPV allow you to do? Okay, so if you take my typical modus operandi in a stock like, let's say FAR. Okay, so you probably are familiar with FAR. It's a kind of a similar situation to Carnarvon. It's a busted oil and gas play that had a really good asset, didn't know how to manage their finances, had to sell it at the bottom of the market because they couldn't fund their development commitments. Got carried out of their main asset, was left with a tiny earnout and a bunch of cash, and a manager who didn't want to give the cash back, even though she'd proven herself wildly incompetent to do anything at all. I mean, this is just a matter of public record. It's not really up for debate. Like, it's crazy to me how much value that company managed to destroy, having essentially found one of the world's most significant oil discoveries of the last decade, and ended up with a market capitalization of like $50 million. It's insane. Anyway, so they had no assets. They had an earnout. They had a bunch of other hopes and dreams, exploration-wise, that were basically worth nothing after a drilling well failed. It was eminently clear. And they had a bunch of cash. The stock's trading at 45, 50 cents, and some other Aussie fund, Samuel Taylor Asset Management, very smart guys, come in and bid 50 cents for assets that are eminently worth a dollar plus. So 50 cents on the dollar, but can you get the dollar? I mean, again, going back to our previous commentary. And so this was interesting. I took a large position for myself. I wrote about it for my subscribers. I assume a lot of those guys took a position as well. You can see how many shares are trading. So I kind of have a rough idea of probably, let's say, like-minded investors, how much they own of the company. But nevertheless, the problem there again was there was one 20% shareholder who didn't want to play ball. So essentially what I'm saying is if I had the SPV back then and I'd managed to acquire, not, let's say, in my own name, 1 or 2% of the company, which is what I had before they paid the special dividend, which returned a bunch of the capital. I own personally 1 or 2% of the company, and then, let's say my subscribers, followers, whatever, they own another few percent of the company, 5, 6, 7% of the company, and then some other guys on Twitter read about it and follow along. So ballpark, 10, 12% of the company is in the hands of, let's say, sympathetic investors. Even then, it took us a good 18 months to convince the board that it was our way or the highway. Okay. And even then, we had to come to the point of calling a meeting. And Travis, to your point about publicly embarrassing the board, demonstrating to them that we now had the numbers because of that 20% shareholder block. So if I had had the SPV back then and I'd then been in a position to immediately move to a 15% position, that would accelerate the whole process, right? So the huge value of being able to draw on more capital is not to make more money, really. I mean, yeah, it's great to make more money, but it's because the capital gives you the gravitas and the ability to extract value. So you have more bullets in your gun. The more bullets you have in your gun, the less likely you have to use the gun. You just have to show the gun, right? You rock up with a Magnum 45, you show it to them, they're going to give you all their money. You rock up with a pea shooter, they're going to say, hey, does that thing even work? You know, that kind of thing. So I probably shouldn't have used the analogy of like a robbery because it's not really what I'm trying to go for.
In addition to assassinating CEOs.
Metaphorically. Only the ones that deserve it. I mean, I always say, like, the CEO of Microsoft is never on my hit list because guess what? Microsoft's stock is up a shitload, right? Like, I mean, the best defense against, any kind of annoying activists like myself is just do better.
You don't even need a physical gun, mate. You can just have just reach into your jacket and act like one's in there. That's even
Godfather style, like outside the hospital, where he's like,
Jeremy,
I think everyone's seen that movie, mate. They're going to call you on it now. They're going to call you on it.
All of the examples we've talked about so far, they've been cash boxes, and you're trying to, extract the cash box in some way, shape, or form. But there's another style of opportunity that you've dabbled in the mining world, and that's where the cash box is no certainty. It's basically there's an arbitration ruling which may or may not play out in its favour, and you see you get excited in it for that specific reason. Do you want to talk about firstly Cassius mining, which is, I mean, we're talking about a microcap here, mere $16 million on the Aussie market, and you're pretty explicit in your writing that it could be a donut, but the thing that gets you interested is it hinges on evaluation of a potentially favourable arbitration ruling.
Yeah, sure. Okay, so I really need to preface this part by saying, within the context of my own wealth and my own fund, my own NAV, net asset value, these stuff are all sized like lottery bets, okay? So it's almost a completely different part of when I'm dealing with a FAR where it's 50 cents on the dollar and I'm pretty clear on that's a very hard number and I'm, actively working to extract the dollar, or Carnarvon, all these kind of ones, these are sized completely differently, much, much, much larger, right? So we're going way off the risk spectrum here. So I don't want, these obviously smaller companies and they're like options, lottery tickets. They could be a 0 or they could be a 10, 15, 20 bagger. And if they ever get priced at a 5 bagger or whatever, I'm punching out, right? So I just want to be very, very clear with everyone who may or may not be interested in these kind of investments. These are play money only. Like a lot of these things, yes, I have high conviction in them in the sense that I think the optionality is massively underpriced and it's an under-trafficked area of the market. But you can't be going and talking about these things in the same breath of a Woodside or a large cap stock or even a cash box with a bad owner is a kind of completely different proposition. So that has to be said with absolute clarity up front. Now, having said all that, sell your kids, sell your wife, sell your car, put it in Cassius. I'm just joking. Don't do that. Don't do that.
Back.
Jerry Harvey.
No. I'm just kidding. I'm just kidding. So basically, the interesting thing about these situations, it goes back to kind of market structure, right? So you have a universe of small cap mining stocks populated by dreamers. On the one hand, the management teams that like to sell a dream of like, we got a hole in the ground and there's a bunch of money's going to come out of it. So give me some of that and I'll give you the money back in 2 years, okay? Or 3 years. And then you have a bunch of dreamers on the other side, meaning the investors who want to buy these lottery tickets. They're looking to get rich off the basis of some massive discovery and development of a mine. They want to find the next Pilbara Minerals. They want to find the next Liontown, before the blow up. They want to find the next Paladin, okay? A stock that once went from 1 cent to $10, okay? And then all the way back again, and then back to $1, whatever, right? So that population of investor is completely different than the kind of deeply analytical, legal mind, litigation arbitrage, litigation analysis type focused invested that is required in situations like this. Meaning you have an asset, a mining company's essentially had their mining license stripped from them. Essentially, a lot of these are mining companies. Someone's mining in some shitbox foreign country with a dictator, okay? The government changes, they unilaterally change the rules, they take back the mine. Maybe there's no mine. Maybe it's just a license to explore and they've already tipped in 50 million, 100 million. Maybe there is a mine. Maybe there's a bunch of infrastructure. The story's essentially that kind of story over and over again. And essentially the main investor base originally is just there for the mine. They're not there for the litigation. They don't understand it. It's complicated. It takes a long time. The pathways to get paid are hazardous, rarely trodden, but belayed by pitfalls. Not only that, because of the structure of these if you have a claim sitting within a small cap listed public entity, you have all these costs that dilute your return over time. So you have a public company cost, which is substantial, a few $100,000 a year, whatever. If the company's only a 5, 10 million, 20 million market cap, that's substantial. You have directors' costs, you have directors' fees. When you're pursuing these claims through the courts, you have all other costs. Obviously, you have the huge litigation costs, multiple millions of dollars over many years. But beyond that, you have expert reports. You've got to prepare a quantum report. How much value is actually stolen? How do you get to that value? Witness statements, testimony. All this stuff that some of that will be covered by litigation financing if you have that, but others you just have to kind of eat. So you have this situation where your main asset oftentimes these are one mine companies, or it's generally the thing of most value to the company is what gets stolen, right? Otherwise it wouldn't have been stolen. It's generally how it works. The problem is you had this massive rotation in investor base. Not problem, it's an opportunity for people like me, but so you have no natural owner of what the stock has become, right? This is not a Cassius comment, it's more a comment of all these litigation plays where they went from being junior mining plays, offering hopes and dreams to, well, we have this litigation that's very complex, going to take a number of years, and we'll need rounds of financing, variously dilutive, run by a mining CEO who is not a lawyer, or doesn't really have any particular insight into, the arbitration process for getting money back from a sovereign nation. So I think it's under tapped kind of opportunity just in general, like the litigation space. And there's a handful of these companies all over the world that, I kind of try to look at because I think they're interesting and I think there's value to be created. And also, there's a huge amount of optionality if some of these things play out. To some of them on the ASX, some of them are on Canadian exchanges. There's even one on the UK, one or two on the UK, kind of London Stock Exchange that I've been looking at recently. So I think it's a very interesting space. But again, as I kind of reiterated earlier, this is play money only. Like this is, the amount of money I put in Cassius, or maybe I'll talk about Montero as well. But this is, de minimis, very, very low single digits or even under single 1% or whatever of my, net worth. So yeah, it could be a huge multi-bagger winner, but if it goes to zero, I'm not going to miss it. So that's kind of the approach. But Cassius specifically is interesting. I guess I'll try and go in a little bit more detail, but not too much detail to bore everyone. Cassius is interesting because I think it has a lot of the things that make a good arbitration claim or a good lawsuit in spades at a very, very low price. Meaning, a lot of these claims, they're claims over the supposed NPV of a mine that has yet to be built or is yet to have any operating history or whatever. Okay, so-and-so gets a mining license, they invest a bunch of money, they dig the hole, maybe they even get close to production, but ultimately then the asset gets stolen and they go and claim against the government for NPV. Basically, they run a DCF of the 2P reserves or, the proven reserves. They make an assumption on gold price or whatever it is. They make an assumption on interest rates. They calculate a DCF and they say, okay, you owe us $1 billion.
Yeah, think about AVZ is fresh in our mind.
AVZ was front and center.
And clearly oil and gas is fresh in your mind, Jeremy, because we don't have 2P reserves in mining.
Sorry. I'm getting confused with the oil stuff. But yeah, so and there's nothing inherently wrong with that, okay? It's not intellectually wrong to do that. But if you're arguing before a tribunal of, disinterested observers that, hey, we invested 50 million 10 years ago, interest rates are very high in Ghana, and look, there's all this gold in the ground, and we would have mined all that, and we would have mined it at a low cost. As you guys well know, given cost inflation, what you say on paper in the feasibility study, what you actually get at the end of the day, are completely and utterly different. So it's just a harder argument to make, okay? I'm not saying you can't get value from it. It's a hard argument to make. So What's different in the Cassius case is that actually the mine has already been fully mined out. Well, not fully mined out, but they're claiming they have a very strong case. The Chinese were given the license illegally, and the Chinese illegally mined on their land while the time they had the entire license. And so they're not actually claiming, well, the theoretical value, the NPV of this thing is, $400 million. They're basically saying Shaanxi Mining, this Chinese concern, has already taken $300 million of value, whatever it is, from our tenements. So they're not, and the other thing is a lot of these claims, they actually want to get the land back or the tenant back because they try and negotiate an outcome, right? So they say, listen, the license was taken incorrectly. We still have the license. It's still our land. Give us the license back and we'll invest and we'll build the mine still, which is what Kingsgate Consolidated did. KCN, maybe you know this one.
Yep.
This is a
Thailand
coal mining. This is actually how I got involved in this space because I did some massive Twitter rant over Kingsgate where I said these guys are absolute idiots. Like they had an award going to be handed down that was probably going to be $1 billion award, and instead of just taking the cash and running away, which any self-respecting investor would have done, they said, no, don't tell us what the award is. Don't tell us the number, even though the number is going to be like close to $1 billion. Just give us the mine back. 5 years after they've been kicked off the land, all the bloody miners who've been working there have all gone and got another job. You've got to retrain the entire workforce. Costs have exploded. Obviously, this is 2016, 17. They thought all-in sustaining costs was like $800 an ounce. Now the latest reports like $1,200, $1,300, $1,400 an ounce, like through the roof. So there's absolute mismanagement up the wazoo. But the point is that's not the case with Cassius. There's no chance they get the mine back. They're literally just going after the cash because all the value that was in the ground, most all of it has already been mined. It's essentially the Chinese illegally mined on their land, and they're going after the government for letting the Chinese do that, essentially. And the third point that's interesting in this case, that's quite unusual to other cases, is that a lot of the evidence that would likely be presented or that will be presented at the arbitration hearing is already in the public domain. So there was a very interesting investigative report done in, I think it was the Sydney Morning Herald, called Blood Gold. I'm pretty sure it's Blood Gold. If you search Blood Gold Cassius, you should be able to find it, where they essentially went and described exactly what had happened at this mine over a number of years, how the Chinese had illegally mined in extremely dangerous, inhumane conditions, how they'd gone in and blasted sections of the mine underground to stop Cassius's investigators from seeing the extent to which they tunneled under Cassius' tenements. And they illegally blasted at times when artisanal miners, meaning local Ghanaians who often enter mines illegally to get gold, even though they knew these miners were underground and in harm's way at the time, they didn't give a shit. They just went ahead and blasted anyway, and scores and scores of people were killed.
Jesus
so
Christ.
You have this situation where there's a lot of evidence. Sorry, what was that?
Oh, I just said Jesus Christ.
It's other than the whole financial implications of this case, it's a huge humanitarian disaster, kind of a perfect example of what goes wrong when you have bad actors who, via bribes and other kind of corruption, just want to maximize value at the expense of all kind of moral humanitarian concern. All kinds of best practices go out the window, and they just go after the quick and easy dollar. It's kind of a perfect, sadly sad to say, a perfect example of that as well. So not only do you have certainty of value in the sense that the minerals are already being taken out of the ground, and so you can make the argument looking at this Chinese company's own financial statements and mine plans, feasibility studies, scoping studies, mine extension plans that have all come into the company's possession via discovery, let's say, and also the fact that the whole reason this investigative report got written was because our Ghanaian judges have been caught on camera offering bribes to Shaanxi. So that, they had all these other intermediate hearings in Ghana to try to get the licenses back and things like that. And they have the Ghanaian judge overseeing the case court meeting with Shaanxi officials ex parte, meaning outside the courtroom. And then they have the local governor for the area offering a bribe on tape to the investigative journalist, saying, please don't write this story about how Shaanxi is basically corrupting all the officials. So, of course, this would go nowhere in a local Ghanaian court, but in the International Center for the Settlement of Investment Disputes, it's called ICSID, which is a division of the World Bank. that is kind of a more fairer venue to hear these kind of disputes. So look, this is kind of why this one in particular is interesting to me. They have kind of all these things going for it. There's an element of certainty of value. It's a relatively clear-cut legal standard, and there's a ton of information in the public domain that allowed me to de-risk the investment. Having said all that, it's still very early stage. Like, they haven't even set the seat for the hearing, meaning they haven't even decided whether they're going to hear the tribunal is going to hear the case in Washington or Paris or London or wherever. So, and these things are kind of at least 18, 24-month processes. So they need to set the seat. They probably need to sign a litigation financing deal, meaning they need to fund the $5-6 million that it's going to cost to run the case. That's going to dilute your returns substantially.
Oh yeah, and those lawyers take a good cut of the proceeds.
They take a good cut of the proceeds, but I mean the rough math is still pretty compelling. Like, right now, Cassius is claiming at least $275 million US of damages, or that's the size of their claim. That's a dated number. That's not up to date for latest gold prices, and not up to date for the latest extent of mining, because Shang-Chi still mines at the site today. It's not up to date for interest rates, right, which has obviously gone up a lot. But even on that basis, and if you assume like 30-40% extra dilution, and you assume litigation financiers take half of all proceeds, this is still like a 10-bagger. So, by the way, I'm not saying that's the base case. That's just kind of to give you a sense, because there will be more dilution. The litigation financiers will take, generally the way it works for litigation finance is you get some multiple of money. So if the case is going to cost $5 million to run, they'll get at least 3 times, maybe 4 times the multiple of money. And then depending on the negotiation, a balloon payment, depending on success. So if the ultimate, not the award, but the amount of cash that the company gets in their pocket, if that number is about 50 million, about 100 million, you get a sliding scale and the percentage goes down the higher the number goes. So look, depending on, I've seen a few of these other deals, a third of total value of the award would probably be on the about right. Maybe it's 40%, maybe it's 30%. It's probably not going to be less than 25%, just given some of the particularities here. But even so, if you're talking 275 million, if you say a third of it goes, and let's say you settle at 50 cents on the dollar, it's 140 million, call it US. So what's that? 200 Aussie. And let's say 60, 70 goes to litigation financiers, so call it 120, 130. I mean, there's no real other claimants on that money, and there's tons of losses. So all that other value should come back to shareholders, and the market cap today is like, what, 11, 12, 13, right? So, I mean, this is the kind of math, roughly.
Yeah. And then there's, Montero Mining, which is another micro cap, and given your interest, I know you haven't got any public writing on this yet, but I figured you're not interested in a bloody micro cap junior exploration company. There must be something here. I open up the MD&A, and sure enough, there's another arbitration call option type dynamic thing that's piqued your interest on that front. This time Tanzania though, but another ICSID case. Yep. And yeah, I mean, fresh in our memories as ASX participants is the Indiana Resources had a recent success there, which I suppose might be part of your thesis for being interested in Montero as well.
Definitely. Look, I'm involved in Indiana Resources as well. I have a small position in Indiana. I think it's an attractively priced security given where they are in the case. Obviously, the stock's up a lot, but I mean, I don't want to take you through the whole ringer of what the case with Tanzania, but basically there are 3 cases in Tanzania that are all interconnected because they're all essentially the same legal theory. When the government changed, I think it was 2016, maybe 2017 off the top of my head, essentially everyone who had a mining license in the country got it taken off them. Now, Indiana had a copper gold mine, I believe. Windshear Resources, a Canadian company, had a gold mine, from memory, a gold mine. And not a gold mine, sorry, I should say a development, a tenement and exploration and a lot of invested capital on the ground, but not an operating gold mine. And this company, Montero Mining, had a rare earths tenement and project. And so these are all linked because Indiana has progressed very far along the journey to getting paid. Not only did they pursue under the exit process a claim for, it was 127 million Aussie, so about 85 million US. They won an award at 140% of that claim number, about 9 months ago, I want to say, 10 months ago. It was very interesting because they had the final hearing in February of last year, and then the arbitration gave the award 4 months later. That is lightning fast. That suggests to me that it was just absolutely clear cut, right? So this tribunal, by the way, each tribunal is independent. So even though the kind of same country, same lawyers, like all these three companies have the same law firm, okay? Same jurisdiction, same IGSID panel, but different actual people on each tribunal. So what's the difference between each of these claims? One is time, like where are you in the process?
Are they all using Clifford Chance?
No, they didn't use Clifford Chance. It was Boys, Schiller, and Flexner is the name of the firm. Another topic. So Indiana, Winshire, Montero. 3 claims for expropriation, all based on the same legal theory. Tanzania basically illegally took your mining license off you and the government changed with no compensation. They illegally changed law. They deprived you of value. Okay? One of them, Indiana, moved the fastest and got an award. Okay? Not only did they get an award, they got it in record time and they got it at 140% of the number they claimed. Now, normally the way it works is you claim the biggest possible number and then the tribunal says, you wanted 100, we'll give you 50. They said, we wanted 85 and they got 112.13 plus $1 million a month interest. Interest is still running. So that kind of reset the table stakes on all these other ones, okay? So then Tanzania appealed via a process called annulment, which is still ongoing. Indiana didn't want them to appeal because the victory was so overwhelming. They said, look, annulment is only granted if you can prove that the tribunal was constituted illegally or that there was corruption at the tribunal or there was some massive other error or negligence in process. So they wanted to stop the annulment proceeding. They didn't manage to do that, but what they did extract is what's called an undertaking from Tanzania, which is a legally binding document, at least in the eyes of the World Bank, whereby Tanzania committed to pay any final award number within 45 days of the final decision on annulment being handing down. So the annulment process is like an appeals process, takes another year. So then Tanzania can claim, well, we lost the award, but the process was unfair or illegal, or there was some technical reason why it should be invalidated, okay? Very, very unlikely to happen, but there is some small chance at which this may happen. But if they lose that final appeal, then they've agreed to pay within 45 days the full quantum of the award, which, by the way, is still occurring at $1 million a month. So since that has happened, actually, within, I guess, a month ago or a few weeks ago, the tribunal has already struck down 2 of 3 grounds for appeal under the annulment, meaning Tanzania is down to their last strike. They gave 3 reasons why they wanted the annulment. 2 of them are already being invalidated as being not even worthy of further consideration. So Tanzania is really throwing up a Hail Mary, and the way that case has progressed seems to me the most likely outcome is a settlement, because Tanzania is still on the hook for $1 million a month. If they lose, they'll pay 100 cents on the dollar plus all the accrued interest. The window for a settlement is closing, but it's still eminently there because there's risk of collection, right? So let's say Tanzania loses the final award and then revokes, goes back on their undertaking. I mean, that would seem unlikely, but it's possible. Tanzania is pretty shitty country, at least in terms of honoring their commitments, let's say. So if you're the CEO of Indiana, you'd probably settle. I mean, the question is, what would you settle at? You wouldn't settle at 50 cents on the dollar, definitely not. You might settle at 85 cents on the dollar to avoid risk of not getting paid, something like that. So that's case 1. Okay, so as I said, there were 3 cases. Now, the second case was this company called Winshire Resources. Winshire is listed in Canada as well. I was also involved in that one. No longer involved because they settled with Tanzania. So they were pursuing a very similar situation, IGSID, arbitration, same claims, same idea, different asset, but kind of same legal basis, same lawyers. They were asking for, I think it was 100 million. And they settled with Tanzania before the arbitration hearing was even handed down. So they'd done the hearing, but they hadn't heard if they get an award or not. This was just 2 weeks after the Indiana settlement. So not settlement, the Indiana award. Indiana got their award early February. Oh my God. Tanzania is like, they're going to lose all these other ones, right? So then they settled at 32 cents on the dollar. Basically, they settled at a very low number, but there's no risk of cash paid. They just got the cash paid immediately. So you might say, well, that sounds like a low number, but if you consider IRR, if you consider that there's no risk of an annulment there. You don't have to wait another year and a half, 2 years. You don't have to chase up Tanzanian aircraft trying to ground them. You know what I mean? So it's not, for a junior miner, not the worst outcome. And that, to my mind, that kind of sets the low case. Okay, so if Tanzania is willing to settle and pay cash at 32 cents on the dollar, that's kind of the minimum outcome. And these are all the same cases. They're basically all the same cases. There's some variations in terms of how you calculate the quantums. There's some uncertainty there. There's not all that information is readily clear. But if they're going to lose one case at near 100 cents on the dollar, or let's say 80 to 100 cents on the dollar, which seems kind of quite likely to happen at this point, and if they're willing to settle cash pay, no delays, no nothing, at 32 cents on the dollar, then theoretically the value accruing to Montero should be somewhere in between these two numbers. That's kind of the logic of how I approach it. So Montero is further down the line in terms of delayed. They haven't been as fast to get their act together. They've been relatively capital poor. They have not yet had the arbitration hearing. Now, that is scheduled to be held very soon, within the next couple of months. I think it was meant to be even held already, but it's been delayed for whatever reason. But that will be held in Washington. So this is basically the 2 or 3 day period where you present your case. All the briefs have already been filed. This is where you get up in front of the tribunal and say, look, here's what happened. Here's why you owe us, $100 million, whatever. Now, Montero is currently trading at 32 cents CAD, which is about, on my numbers, so basically what I do is I try to work out what the implied net cash recovery to Montero shareholders is after all those other fees that I mentioned, like litigation, financing, what have you. So I think at current prices, Montero stock is implying that shareholders get about 30 cents on the dollar for their claim. In other words, kind of in line with Windshear. Now, the stock has doubled since I put my money in. So I got in when I backstopped the recent capital raise because they needed to bridge to the arbitration. It got delayed a bit. And then I got my money in at 12, 13, 14 cents on the dollar, and now it's at 30 cents on the dollar, okay? To my mind, this is still pretty attractive because, as I said, Windshear settled at 32 cents on the dollar, and that was when the Indiana case had not progressed to where it was, okay? Now Indiana's like maybe less than 6 months away from potentially getting 100 cents on the dollar. Excuse me. Excuse me, I'm getting too excited. Yeah, so we don't know what's going to happen ultimately with the Indiana case, but it's been progressing in a very positive direction. And also in the last few months, Tanzania has received over $1 billion in funding from the World Bank. So one of the other risks to consider here is even if Tanzania wanted to settle or wanted to pay, do they have the money to pay? Right, their government bonds, they don't even have government bonds in US dollars. They, crazy high inflation, basically a busted country with very resource rich, a lot of corruption. You don't really know who you're dealing with, right? You call up one person in the government, they say they want to settle, the other guy doesn't want to settle. It's very hard to deal with them as a counterparty. So the fact that they've got $1 billion coming in from the exact same entity, by the way, that governs these ICSID tribunals. So the World Bank sitting on top, they gave Tanzania $1 billion. Tanzania is trying to get back on the horse, trying to get foreign investment. Doesn't mean it would be impossible for them to not pay an award if they lose the annulment to Indiana. But it seems increasingly unlikely, to my mind, that they would try and renege so soon on a commitment, okay? So it seems to me, if you had a rational actor sitting in Tanzania right now, what's the way to kind of limit the losses? Well, you go to Montero, which is the slowest claim, and they want 90 million CAD, Canadian dollars, okay? And you say, look, you're not going to get what Indiana gets. They've put in an extra 2 years. They're in the 9th inning. Baseball analogy. They're in the 9th inning. You guys are in the 5th inning, okay? We'll give you 50 cents on the dollar, cash pay, something like that. The way to limit losses is they're not going to be able to limit losses anymore in the Indiana case. Like the Indiana case has progressed too far. They've invested too much time and effort. The CEO of that company has done a very good job, Bronwyn Barnes. She's kind of delineated that they're going to go very close for full value if they can get, 80 cents a dollar, 85 cents a dollar, something like that. Maybe even more. I don't know. But if you go to Montero now and you say, let's tie this thing off at 45, 50 cents on the dollar, that's a 70 cent stock, 65, 70 cent stock, Montero. They have basically no other assets. They have basically no other debt. So to my mind, yeah, it's not as attractive as where I put my money in for sure. But it's still pretty attractive. I should mention I'm locked up. I'm locked up in the stock for I think 4 or 5 months or something. So I can't, can't trade the stock or whatever. But yeah, I think there's a reasonable chance that a base case outcome on Montero is you get probably through negotiation something like Yeah, I mean, maybe 50 cents on the dollar is slightly optimistic, but that's kind of the level at which I would, as a financial investor, I would accept, thinking about a settlement at that level. 30 cents on the dollar, no way. One of the reasons why 30 cents on the dollar is too low now is obviously with the reasons I mentioned with regards to the progression of the Indiana case and the financial avenues available now by the World Bank to Tanzania, but also Windshear's prior owners, one of them was a mining company called Palomina. So basically, Windshear was a mining company, and they had a 20% shareholder with another mining company that needed cash for their own hopes and dreams. So they were motivated to get cash soon to pursue their other mining dreams, okay? I don't care about that. I'm in it for the court case. For me, the value is the court case. So, to the extent that I'm able to exercise some kind of, I don't want to say influence, but to the extent I can make my views clear, I want to maximize value from the court case because to my mind, that's the entire value of the company is the court case. Like, I'm not interested in what else they got going on. So, yeah, I'm not taking some lowball settlement just because Windshear needed the money. There's probably a settlement to be done. There's probably a discussion to be had. And I think that probably starts around 50 cents on the dollar. So probably another clear double from here. Thereafter, it gets stickier, to be clear. Thereafter, it gets stickier. But even at today, 30 cents still seems like that's probably the low case outcome to me.
Jeremy, it's fascinating to hear you talk through, and I like the logic in which you explain the investments. And you started doing this almost 10 years ago on Twitter, putting your ideas out there, starting to get feedback and kick around, and also build a bit of a track record, I assume, potentially to either raise money or something down the future, or at least have it out on paper. And then you went down the sort of newsletter route, and like Trav said at the beginning of the show, you get 150 subscribers and you build a good business out of that. What's the ultimate sort of target for you? Is it being a personal investor? You said, earlier in the interview that managing people's money in the SPV form comes with all the trouble of dealing with people, essentially. So what's the ultimate goal in your investing sort of journey?
That's a good question. I mean, I've definitely thought about it a lot. Look, I've tried to raise a fund on numerous occasions historically and failed every time. I tried with little experience, say over 10 years ago. I tried with a lot more experience, say 5 years ago, with highly credible partners. And kind of that experience soured me, frankly. Like, at that time, I needed money and I didn't have a lot of money. I'd done well, but I didn't have kind of gravitas or enough money to sustainably invest in the way that I thought was most appropriate, most in sync with my style. Now I'm lucky and fortunate to have had, a number of years of success and grown my assets to the point where, I never have to really go to anyone to ask for their money, right? They're just, it's liberating. And I'm very fortunate. And so now my perspective on it has kind of changed a bit, and I don't really want to manage a commingled fund. I don't think, I'm not in it to kind of become a billionaire or want to become a billionaire, or even there's some guys who I know are in it who do not want to become billionaires, but they want to be on the Hall of Fame, as one of the great investors. And, taking outside capital is a very different game, and it's a much harder game. I'll be completely frank, right? You have monthly, or maybe not monthly, quarterly scorecards, and you don't have permanent capital most of the time unless you're very, very fortunate. So I don't want to say you're fighting with one hand behind your back, but you're constrained in so many different ways. And the more capital you take, the more constrained you get. So yeah, there are rewards to that because you can make more money if you're right and if you outperform. But there are these huge constraints on your time, on how you invest, on how you live your life. The phone. If someone gives right now, I have 150 subs. Okay, they each pay $2,500 a year USD. Again, that's great money. Don't get me wrong. I don't need the money. But if anyone doesn't like the service, or they just want to cancel, or they want to give me an earful, I just say, no worries, here's your money back, or cancel. That's totally fine. Like, no harm, no foul. If someone gives you a check for $10, $20, $30 million, they call you at 2 a.m., they're not happy, kind of can't hang up on them. I mean, you can't say,
I'll just give you your money back.
You could, but
it's
hurt. Very difficult, right? You take a lot more responsibility, and there's a lot of justifiably that your client kind of owns you. You kind of take a boss. So I've always kind of been more of a lone wolf type. I think I was fortunate in a way to not raise money to get those funds off the ground, because I'm not sure I would have handled it that well. Yeah, I think managing just your own money and going about it your own way, it's definitely easier than taking OPM, other people's money. It has supposed, less financial rewards, I guess, but I'm very fortunate. I never have to kind of worry about that ever again, even in a very, very dire scenario. So I just want to keep investing in the way that I know how, or the way that I've kind of evolved towards. I want to push this social activism as far as it possibly can go. I wouldn't mind doing a few of these SPVs, as I said earlier, because I think it helps get better outcomes for myself and also my investors, right? Like, I think it just leads to better outcomes. Like you can just do better with a bigger gun, or more bullets in the gun, so to speak. So I do think that's valuable, and I'm willing to do that. And we'll try to do those in bigger size and attack more interesting, larger targets over time. But I have no desire just to run outside money in a communal fund for its own sake. I have no desire. How many boats can you water ski behind, right? Like to quote Gordon Gekko or whatever, the Charlie Sheen. So yeah, I mean, be nice to have 3 Lambos, but one Ferrari is enough for now, I suppose. Big. I mean, I enjoy, like if I wasn't getting paid anything, I'd probably still do it because, it's a very, hugely stimulating mental game, and trying to figure out the puzzle that is the market or individual stocks or these situations and unlocking them is hugely satisfying. And I also enjoy writing about it, and I learn a lot writing about it. I mean, that's the whole reason why I started doing a newsletter. It was not for the money, really. I wrote for like 9 years for free before I even got a dime. I just found it interesting, and it makes you clarify your thought. It makes you distill, clarify, and present cogently what you're trying to say. And if there's a problem in the thesis or the thought process, that will become apparent during the writing process or after, because people will call you on it. And, I was a history major, so I was very, used to having to defend my views on paper in an organized fashion. I think that's a highly valuable skill no matter what you're doing, whether it be investing or, marketing, advertising, any kind of field. Really, it's a hugely valuable skill. So I'm glad to have developed that. But yeah, as regards to investing, I just kind of keep doing what I'm doing and kind of gradually extend outwards. Instead of doing maybe a 20, 25 million SPV, maybe do a 50 million SPV, 100 million SPV, and kind of try to create more value for myself and for everyone, because there'll be a bigger pot to kind of go after. But if that doesn't happen, or if, those are very ad hoc, those are very kind of, that ovation situation that was, I don't want to say lucky, because I did create the lead to get that situation, right? I basically found the seller. But, these things are, you can't say I'll do 3 of those a year. It's just not, it's not like producing cans of beans on the production line, right? So yeah, as and when they come, I'll keep myself open to opportunities and try to keep learning new skills. But I'm also not in a way, I spend a lot. I have 2 young children, very, very happy to spend as much time as I can with them. And I find as I do more and more of this stuff, I tend to make more enemies online and elsewhere. So I got to also make myself, I can't make myself persona non grata in too many countries, but there's at least a couple of countries now I can't go because I've written angry letters to people who are important there. And I'm on some shit list in Indonesia, for example. I can't go there for like 5 years.
Mate, speaking of upsetting people, we're obviously based here in WA. I've noticed you picking fights with 2 of our billionaires here in Western Australia in your recent tweets. The first one with Twiggy Forrest, who you quoted saying, "This is what happens when you start believing your own green bullshit." And the second one was the Stokes family, who yesterday you said that the Stokes are doing it all wrong, paying 25 times forward PE for a cyclical well above mid-cycle earnings, talking about their proposed acquisition of Boral there. So, mate, can you
I mean, sure. I'm not really in the business to pick fights.
We're not sympathetic with either of those billionaires, by the way, so you feel free to bag them out.
I mean, look, Andrew Forrest is a visionary, an absolute visionary businessman, a titan of Australian industry. He made all his money extracting resources from the earth, ripping them from the earth's core where they were lucky to be located, and he had the skill and the ability to find them and exploit them to his benefit. And then now that he's made his $50 billion or whatever he has, now he's Mr. Let's make green hydrogen, let's make green steel. I mean, it's the height of hypocrisy, the absolute utter arrogance. It's just ridiculous. I mean, like, I have no problem with him doing what he's done to make his billions, but you can't then turn around and be like, okay, now we're going to make steel 3 times the price, and we're going to put the price of steel up for everyone else who's a late developer. Like, essentially, ESG is such a massive scam. It really pisses me off. Has nothing to, because it's completely and utterly antithetical to everything else that we should stand for. It's so like, people are really anti-colonialism, anti-imperialism. You know what's freaking colonialistic? Putting up the price of reinforced concrete for everyone in India that doesn't live in a reinforced concrete building now, because you decided that steel has to be made from a decarbonized energy source. Even though half the bloody, steel in the world, it's all going into China and India where they don't have reinforced concrete, or developing market automobiles or whatever. I mean, it's total and utter arrogance, because you already have the reinforced concrete in all your fancy buildings. I mean, it's just absolutely ridiculous. Even if it was possible, like, people just won't call it for what it is. So it really gets my goat when you have people who didn't just make their bread, they made hundreds of millions of people's worth of bread through ripping dirty resources from the ground. Fair game. And then going on about their, God's gift to the earth of, environmentalism and how we need to get religion. Yeah, so basically the hypocrisy is risible, and I mean, he should just basically be quiet, keep mining his iron ore, and let people live their freaking lives, okay? Like, he's not, just because he got lucky and skilled and lucky and made a bunch of money exploiting resources that happen to be there that are undeniably dirty, doesn't mean he gets to turn around and tell everyone else how to live their lives, let alone people who have, far, far less than not just him, but then people living in the West in general that just want to improve their lives. So, I mean, look, that's a fairly banal, kind of generic, bland anti-ESG statement that maybe resonates with you guys, maybe doesn't. But yeah, it's less about what people actually say. It's more the hypocrisy in the way they kind of, the John Kerrys of this world who fly their private jets to Davos and get to dictate I mean, at least he never owned a multi-billion-dollar iron ore mine, okay? I'll give him that. But even so, the scion of a very, very wealthy family flying on a private jet telling, the most racist thing ever is a bunch of rich old white dudes in Berlin or Seattle or Sydney telling a bunch of poor developing nations how to spend their money. I mean, that they're right to go and tell us to F off when we tell them they can't have a coal-fired power plant or whatever. So I think that's eminently fine. And as for Ryan Stokes, I mean, look, again, I'm not trying to pick a fight with him. I just think it's a bad capital allocation decision. He's basically been backed into a corner by what was originally a very smart piece of kind of, I don't want to say financial engineering, but kind of tactical maneuvering, where he acquired a control position in Boral without having to pay a premium when it was eminently a much, much cheaper stock. But now he's worked out he can't actually get out of it. Because if you recall, he actually sold down a few shares.
Yeah, 1%.
He sold down a few shares, and I don't know if he moved the price a lot there, but maybe he worked out that he couldn't actually get out of anything. And so now he's like, well, I may as well just roll it into the parent entity and maybe people will forget about it and I can float it again in 5 years, I guess. Because the only reason it trades at such the crazy multiple that it trades at relative to all these other building materials or, construction-related input companies is because he's cornered the market. He's cornered the market in the stock and he's artificially inflated the value, and now he's trying to engineer a way out of it because he can't sell it. So normally what you would do in this situation is find a PE buyer for it, right? That's my point I was making on Twitter. Normally you would find some private equity guy who could lever it. Maybe that's plan B. Maybe they're going to try and do that at a second stage, I guess. But the fact he's doing it like this suggests to me that they probably knocked on those doors. And the fact, again, that he sold a little piece down and then didn't get anywhere suggests he's probably already tried to pull that lever and was like, no, thank you. So, what's worse than having this thing, if this thing corrects and goes back to a normal valuation, then they get a huge mark-to-market loss in the public markets. I mean, that's probably a lot worse for the Stokes kind of reputation and kind of their empire, let's say, or their ability to trade off that empire and reputation going forward than if they just bring it in-house, amalgamate it with a bunch of other related assets, maybe extract a few more synergies, maybe smoke a few more puffs of this restructuring that seems to be quite successful before it all goes to shit. So, yeah, I mean, look, no real beef with Ryan or the Stokes family at all. They've been very successful. money managers and kind of stewards of businesses. But I just think that move itself is a little wrong-headed.
Brilliant, mate. We're
Too easy, mate. Thanks, Heath, for that. I've got to re-listen to that 19 times and I'll might get up the curve a bit. But bloody brilliant. So we really appreciate the time. When are you coming to Perth next? Are you allowed here?
Well, thanks.
not anymore, mate.
Thanks for
Twiggy
having
will
me,
bloody
guys.
kill him the moment he lands.
Look. At least, at least I can say whatever I want about Twiggy, and he's probably not going to have me like, Tonya Harding the moment I get off the plane in WA. Maybe he will.
This is true, mate. But you just your commentary on the Stokes will mean that you'll have the front page of the West Australian with some derogatory headlines, some tabloid articles about you tomorrow. So.
I've had worse. Don't worry, I've had worse. I'm fighting with half the Sydney fundies as it is. I can still walk around Double Bay, no problem. But yeah, I'm going to have to go to WA. Maybe when they sell Carnarvon for 30 cents or 35 cents, I'll go and we'll go and toast it in Fremantle with Rusty.
Yeah,
I've actually got to look him up about that.
We'll have a banana cocktail,
Yeah, mate,
mate.
we'll do that. That'd be
style.
great. But yeah, if you guys are in Sydney at any time, because I will be in Sydney here and there in the coming year, and obviously full time from the end of the year. So do look me up, and we can chop it up in person.
Beautiful.
Sounds good.
Righto, Cobber.
Cheers, Jeremy.
I'll let you go. Thanks very much, mate.
Matt.
Yeah, bros.
I look forward to hearing your intro. I love the intros on some of the other ones.
I'm glad, mate.
I expect a glowing intro.
Oh, mate, I'll put a shitload of mayo on top. Don't worry about that.
Okay.
Cheers, brother.
Sounds great, mate.
See you, mate.
There we go. Jeez, I feel much the wiser after I listen to it.
No, you don't, Matty. You haven't listened to it.
I haven't, have I? Jesus Christ. It's bloody high-level shit. No, I aspired to be in the world of finance. Well, I thought after all this I could get into the world of finance, but talk to someone that worked at bloody Goldman Sachs and talking all that shit, geez, I've got a long way to go. Fucking hell.
That said, I think he does a great job of actually laying out his arguments, He's clearly super passionate about it and he gets into great detail. But I think they're very logical the way he thinks about situations, the situations that interest him. And
He pretty much gave his old playbook away.
Yeah, if you didn't get it after that chat, I don't think you will get it.
Other than the awesome insight on activism there, I did find it interesting when he said like the process of writing actually helps him have more concise thoughts. And I did have to reflect on ourselves when he said that because, man, I find doing the show every day really bloody helps my thinking about these companies. Don't know about you guys.
Absolutely, and that's
You're forced to bloody try and get it all right because you say it.
It's no longer gut feel. It's like I have to fucking substantiate this.
I can't just tell some prick on the street
Just buy
and
this
think
one.
it's all good. Yeah. That is starting.
I can't just call my broker and tell him to buy.
Oh my! Well, you can ring the broker and tell them what to buy.
The old reverse brokerage.
Oh, mate. Yeah, I've got to get back onto that actually. Right, thanks to all the partners. Bloody VRIFY and Anytime Exploration at the top of the show. Keep an eye out for Australian earth moving and haulage. Mate, InvestorHub, DSI Underground, SMEC Power and Technology, McMahon Mining Title Services, KCA and KCA Site Services, and Brooks Airways.
And K-Drill. Hoodaroo, money miners.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.